information on volume and value, institution identifier, service codes, fees, charges, and the like. Now, this information could be used by an innovator to develop certain products. But as we can see, there's no personal information that's provided there. And so the risk rating for that data category is low. The next category is market insight transactions. Now, this provides statistical data aggregated for products and segments. It's also not associated to any individual or customer, and also does not provide any personal data. The risk rating for that category is moderate. And then we have the personal information and financial transactions. Now, the data within this category is data at the individual customer level and other general information, which contains some personal data, KYC, total number and types of accounts held, and other data that around customer information. But the information here provides more personal data on the individual customer. So the risk rating for this is high. And then the next category is profile, analytics, and scoring transactions. This provides some analytics to the data, e.g. credit score, income ratings, and the like. This category is also high. Now, depending on the next slide, we'll talk about who can have access to these types of information. Now, the next slide here looks at the risk management maturity level and data service access level. Who has access to what? Credit score. Now, participants recall that we talked about who can participate. We the next slide will talk about licensed and non-licensed access can participate in open banking. Now, the first category speaks to participants without any regulator license. They have appeared as tier 2. And the requirements to be able to participate in that category is that you have to be sponsored by either a tier 2 or tier 3 participant, which is either a licensed payment service provider or other financial institution or a bank. Now, the access level is the TIST and the MIT, which is the first and second category that we spoke about in the previous slide. The second category of participants is participants that are on the CBN regulatory sandbox. Now, CBN has a regulatory sandbox, which is also an initiative of the bank to encourage innovation and amongst digital financial services. The regulatory sandbox allows participants that are either licensed or unlicensed to be onboarded onto the digital regulatory sandbox to be able to test solutions. Now, that platform also gives access to certain APIs of certain infrastructure within the industry. And it scales down requirements for licensing, and it integrates that participant to be able to test those solutions within a defined period of time and within a defined scope. So certain number of customers, a limited volume of transactions, limited value of transactions, limited daily number of transactions. It allows CBN to understand what that participant is testing, and it gives the regulator better understanding of digital financial services. It also gives the participant and the innovator access to these platforms, and it brings them closer to the regulator to be able to understand what they're doing, such that when they graduate from that sandbox, we can decide to give them either a license or it may be to even the creation of a new license category, depending on how innovative that service is. The third category there is the licensed payment service providers and other financial institutions. Now, the requirement for that is that you have to be a CBN licensed financial institution, and a risk assessment report has to be provided by two tier 2 and tier 3 participants. The next category, there's a small mistake in that category. The category there is supposed to be financial institutions and banks. supposed to be banks there. So I'll correct that before it is shared. And those are the tier 3, and we can see that the requirements for that is the same as the one for tier 2. Now both the tier 2 and tier 3 have access to all the data categories, which is the PIS, the MIT, PIFT, and PASS. I'll go back again so we can see it for better understanding. The PIS is the Payment Information and Service category, which is the one with the low risk, and then the MIT is the one with the moderate risk, PIFT and PAST, high risk. Now, what are some of the open banking as a catalyst for financial inclusion? Now, open banking gives the opportunity for the expansion of access to financial services. And how does it do that? It lowers the barrier for undeserved populations by enabling both traditional and non-traditional financial service providers, as well as fintechs, as well as any fintech enthusiast or open banking enthusiast, to be able to leverage access to data, be able to develop financial solutions. And these solutions can have great impact on the financially excluded. And they include things like microloans, savings, insurance, and payment solutions. And these are some of the services that we do not see playing a big role in financial touch points today. What we typically see is that even what we see in financial inclusion is that most people are counted as included when they're able to have either a bank account or a wallet. But financial inclusion goes beyond that. It's about providing a host of financial services to that financially excluded person so that their personal economies, as well as the economies of their environment and maybe their businesses, are impacted by those financial services. Other solutions that can be provided through open banking include account aggregation, which is the ability, if you have a number of accounts, to be able to have one single interface that would allow you see all your accounts and all your balances at one point. If you choose to even transact from just one source, you can be able to do it. It can also provide the ability for better credit scoring, where the innovator or the solution can have access to multiple data sources, which may include financial institutions, as well as even non-financial institutions, which could be organizations such as maybe a utility company or a telecommunication company, that all have access and all have data on individuals. Now, one critical thing about open banking is that it is customer permission. What this means is that the customer has to give consent for his information to be shared, because there are regulations and laws around personal data, and therefore the customer needs to give permission before that information is shared by the API provider to the API consumer or the fintech developer. I'm sure other speakers will go more into some of the use cases for open banking. Another way open banking can assist or facilitate financial inclusion is improving credit access and risk assessment. By having access to multiple touch points where the customers will have data, it opens up better analytics for that customer and better credit scoring that is built on that customer, giving him access to financial credit. And this will reduce reliance on collateral and informal credit scores, and will promote financial inclusion and reduce predatory lending practices that we see today in the market. It will also help drive innovation and competition by having this mix of traditional, non-traditional financial service providers, as well as fintechs, payment service providers, a host of different categories of API providers and API consumers. It will create a thriving innovation and competitive environment, which the customer will benefit at the end of the day, because the innovation that will be happening is to meet the customer needs, and customers would be able to have their pick and choose of who they can choose to provide those services for them. This will ultimately drive down cost, improve service quality, making financial products more affordable and accessible. The fourth point is that it will enhance customer trust and the customer experience with financial services. By the time you're able to have these various integrations into multiple platforms, user and customer experience will be significantly enhanced. And customer will retain control over their data. A customer can choose through the consent management to choose when to give access and when to even stop giving access. So if a customer permits for an innovator to use their data to be able to develop certain services, the customer can choose at any point in time to say, I'm no longer interested and I no longer want you to have my data. So it puts the power in the customer's hands to be able to say yes or no. Now, where are we currently with some of the implementations of open banking? We've been able to inaugurate an open banking steering committee, which brought together multiple stakeholders from different aspects of the industry, which includes banks as well as fintechs, payment service providers, as well as other regulatory bodies in Nigeria. Now, that steering committee oversees the implementation of open banking in Nigeria. Part of the work they've been able to do is inaugurate and also put together work streams with the mandate of governance and regulation, technical and infrastructure, data privacy and security, legal and compliance, and then stakeholder engagement and communication. Now, all these work streams also have membership drawn from these same groups, and they've all been given specific mandates, which they have been working towards in a bid for the implementation of open banking in Nigeria. The governance and regulation, for instance, would look at other more detailed requirements needed around the regulations. Technical and infrastructure would look at things such as automating of consent management, as well as API standardization, such that we have one API standard for the entire industry, such that all the APIs will meet that requirement before they can be onboarded and enabled for open banking in Nigeria. Data privacy and security would look at things around data security and data privacy, which is very key, and also in tandem with consent management as well. Now, these work streams, since their inauguration, have been meeting and working on a weekly basis and moving towards finalizing of their deliverables so that open banking can go live. Now, what are CBN's regulatory expectations for open banking? The first thing is the ability for secure data sharing and API standards, and that's part of the work in which those work streams are doing to finalize those requirements. Just to also highlight that those two regulations I mentioned are public documents and they are available on the CBN website. So if you need additional information on them, they're accessible on the CBN website. The second expectation is that participants that are going to be onboarded onto the open banking registry would be vetted to ensure that we have trusted people that would either be API consumers or API providers. And of course, there would need to be oversight on the implementation of the operations of open banking once it goes live. Because customer consent and data protection are also essential. And I spoke about how we're looking towards automating that customer consent such that it will operate as a pop-up and give the customer control to say, I give access or I don't give access, or I stop giving access. And that customer consent will provide information on who is requiring your data, what they're requiring it for, how long they will be requiring it for, and the modalities for you to discontinue or to continue. Other requirements are around risk management, incident reporting, customer dispute resolution, because these are very critical steps and things that we expect every participant to have in place, such that we limit the incidents that can happen within open banking. Now, open banking represents a transformative leap towards a more inclusive financial ecosystem. It will empower individuals with greater control over their data, and it will foster innovation in financial services. It presents the opportunity to break down barriers, empower small and medium enterprises, and unlock innovation that will reach the underserved and create a more equitable future where everyone can participate in the financial space. Thank you for your time. Thank you.
Thank you so much, Mr. Shaigang, for this insightful and strategic presentation on central bank's vision for open banking. Well detailed, and we have a few questions here that we would like you to quickly take before you step out. What is regulation around aggregator platform like you have with the PSD2 in the UK, since each bank can expose its API to third parties? So it means that API consumers will then need to connect to 30 banks to cover their total user base. Is there room for aggregators to help make it easy to quickly onboard third parties?
There is room for aggregators, and those are part of the details in which both the governance and regulation, as well as the technical work streams, are working towards. Now, before open banking goes live, this is information that will be made public and shared, so that everyone is in the know of the expectations and the requirements and where you can participate.
Absolutely. Then the second one quickly. What are the regulations around data privacy and security? What is in place to ensure PII are not exposed, people's information are not exposed irresponsibly?
Okay. Of course, we know about the NDPR, which is a major requirement in Nigeria for the operation and sharing of any customer personal data, and that regulation is implemented within the open banking requirements. Sorry, what was the second question again?
So, what is in place to ensure the personal information are not exposed irresponsibly?
Okay. So the first thing is that and that's why that vetting process needs to happen before anyone is onboarded onto the open banking registry. So number one is to ensure that the right people have been vetted and allowed to come in. Number two is that once you're onboarded on the open banking registry, any activity you do from then on, would be linked to you, because you will be, once you register, you will be tokenized, such that all the activities you do will point to the fact that you are the one that have initiated that transaction. That would help us to be able to carry out oversight and have viewership on who is doing what. In addition to the information that we would also be getting from both the API providers and API consumers as part of reporting.
Thank you very much. So the last one now, is the open banking registry same as Sandbox? Yeah. Let me just give you the three. So I think they are all related. Is the CBN regulatory sandbox operational? So just can you take these two and then.
Okay, the CBN regulatory sandbox is not yet operational. However, work is ongoing and has reached a significant milestone, and hopefully we'll be hearing from the CBN soon on how soon we'll be going live. The regulatory sandbox is quite different from the open banking. The regulatory sandbox is a testing phase. Open banking is live. Even though regulatory sandbox provides innovators with access to live APIs to test, it is for a limited period of time, and it is with oversight of CBN that has direct control of the regulatory sandbox solution, where participants are onboarded. Open banking operates with the open banking registry, and participants that are onboarded there are already licensed entities. The regulatory sandbox is largely for innovators. You can be licensed or you can be unlicensed, but essentially you have a solution that hasn't yet been tested in the market, and you need a safe space to test it. or regulation currently exists that doesn't allow you to operate or test it, and so you're testing it within the controls of CBN. So those are the major differences between them, but they're not the same.
More questions are throwing in, so let's just take one more. Do the credit bureaus have a role to play in this space as either open banking consumers or providers? They have records of credit history of individuals and corporates, and banks are currently integrated with them to fetch credit history. Will this process change?
Yeah, so of course, credit bureaus will also play a part, and credit bureaus hold a lot of data as well. And remember that in the presentation I mentioned that license in tier three, tier two, sorry, is the licensed licensed payment service providers and other financial institutions. Credit bureaus fall under the other financial institution category, and therefore they can choose to be either at any point be an API provider or an API consumer. So yes, their role is very essential in providing this service, and I'm sure they will also take advantage and utilize access to that data to also build on their database, because it will also give them access to data points other than traditional financial institutions, which they can also use to build up the credit score and credit rating of customers.
Thank you so much, Hi Gang. What you have just heard lays a strong foundation for the conversations we're about to have subsequently, right? So conversations that goes beyond policy and framework into real world execution. Thank you so much. Um, Thank you for taking out your time for doing this today and sharing really in-depth insights on what banking is all about and what regulators are currently doing about what you're working on behind the scenes to ensure we have a good outing on this side. So before the panel session, which is what is coming up next, we'll have a goodwill message from Mr. Akin Borakio. He's the registrar CEO of the Chartered Institute of Bankers of Nigeria. So he has a short goodwill message for us. Hello, can you hear me? Is Mr. Akin there?
Okay, you can go ahead.
Okay.
Let's go to the panel session.
So the exciting one now, the next exciting thing. So the panel session titled Driving Financial Inclusion Through Open Banking, we're going to be looking at opportunities, barriers, and action plans. We explore how
Hello.
the building blocks.
It is in Francis, right?
We can hear.
Okay. So we'll explore how the building blocks of open banking, secure data sharing, the API, interoperability, and innovation can be translated into inclusive, scalable, and sustainable solutions for the banks and the banks across Nigeria. So we'll ask how are fintech, bank, infrastructure players bringing inclusion to life through open banking? How will they do that? What's still getting in the way? Be it trust, literacy, regulation, or tech capacity? And critically, what actionable steps can each stakeholder take to accelerate meaningful financial inclusion? To help us unpack these questions, I am joined by an exceptional panel of industry leaders and not just observers of the ecosystem, but active leaders of it. So let us meet our panelists for this morning. On the panel, we have Chika Wosi.
Good morning.
Is he here?
Yeah, I'm here with you. Good morning.
Good morning. So Chika is the CEO, Chief Executive Officer of PalmPay. Of course, PalmPay is not new to us. It's a digital wallet platform serving millions of Nigerians and expanding access to digital payments and financial services at scale. The second panelist is Faith Ojiku. She is the head of embedded finance at Credit Direct Limited. The This is where we are shaping how credit solutions are delivered seamlessly at the point of need, especially for the informal and underserved segments. And the third panelist is Chukwudi Ndiku, the manager sales and business development at Zone. Zone is a company powering next generation real-time payment infrastructure that can enable scalable open banking and services. So together we will dive into the points of today, which is the practical opportunities open banking presents for financial inclusion, the barriers, and the actionable next steps. So let us welcome our panelists. If they are here, let us just say hi.
Thank you.
Hi. Thanks for having me. Hi, Catherine. Nice to see you.
Yeah, Chris, how are you now?
Very well, thank you.
So Mr. Chukwudi, is he here as well?
Yes, and hi everyone. Good day.
Okay. Hi, nice to have all of us. So we go on straight to that. And so on the first topic, which is unlocking the inclusion potential of open banking, I will start off with Mr. Chika. So PalmPay has been rapidly become one of the Nigeria's most useful and used digital wallets, especially among first-time users of financial services. How is open banking going to help PalmPay deliver deeper financial services like credit, whether it's insurance, and so many other things to the bank, and financial institutions?
Okay, thank you, Chair. Good morning, everybody, and welcome to this program. So, firstly, when we look at open banking, which we know that is actually secure data sharing, which allow platforms like PalmPay and other financial institutions to have the kind of personalized services for users. So, for us, the open banking will do a whole lot for PalmPay. Firstly, by integrating alternative data source like airtime, because what we are trying to do in open banking is that we are trying to access data. So, and when you talk about the bank, most of the banks don't have footprint and application because many of them are operating the whole lot of apps. So for us, through the open banking, because we are going to integrate alternative data source to access data like airtime. Agent transactions and other things like that. So PalmPay can offer low cost. Through this, we can offer low cost for services developed to underserved users. Because what we are trying to do is to provide a low cost. When you are talking about financial position for this kind of activity. So we also try to provide things like microservice, instant transfer, and the cash factor, which we already do, removing barriers of entry and cost for this kind of thing. So another thing we are going to do that currently, PalmPay already use transaction history. There are some people that are never associated with their lives. Because Nigeria, for instance, do what we call economy, though we are shifting to credit, but we are not getting to that. So what we did that we use the transaction history, the app behavior, then airtime registration, some third-party loans. We also look at open banking to expand access to user permission for bank data. This will enable fintech like us to access credit worthiness more holistically. Because this is the only way we can do it, even for individuals without formal training. But through this, we can also do it. So, what an open banking can do for material, do other financial services around actual user education. For example, women who is running an informal or rural entrepreneur using PalmPay can access credit, even insurance products that are customized to their partners, kind of enhanced child data from other sources like cooperative societies and etc. Thank you very much.
Thank you so much. You did quite justice to that. The next question will go to Faith. So, embedded finance has the power to bring financial services directly to people, often at the point of need, right? From your experience, how can open banking strengthen embedded lending, make credit more accessible to low income or informal sector users? Thank you so much. Justice to that.
Uche, thanks for asking that question. I wanted to start by just saying shout out to CBN with the open banking policy. The welcome development. I like the way Tika just summarized so many things that maybe we kind of have to say at all. But the exciting part is that when you look at embedded finance as a sector, you're just saying, I want to bring the financial services much more closer to the consumer, to the customers, right? And the truth is, when we talk about financial inclusion, we have to be real that most of our customers cannot come to us, cannot come to those financial services. We need to reach them. And that's how you actually drive inclusion, right? I would typically want to not just try to call data. I would say Mama Risi is emotion to think. She has a small stand emotion. She's selling tomatoes, right? Today she has a feature phone. In her feature phone, she has WhatsApp functionality there. Some of our customers are using that WhatsApp. Where a POS agent is just close by to her, then she can put money in it. But what is important is that Commodity already has behavioral patterns that exist today. It might not be a regular transactional record, it's not a credit bureau because there's something that I keep saying. The credit bureau that we're talking about today, how many people are on that platform? Over 60% of Nigerian adults don't even have credit history. So that is already a important product, right? Already have the normality that we're talking about. This is a world where you don't get it might not be a regular transactional record, it's not a credit bureau because there's something that I keep saying. The credit bureau that we're talking about today, how many people are on that platform? I'm going to offer you this credit. And then so that's already a important product. Already have there's a pattern. A lot of those drivers come to who is always fixing their cars. These transactions exist, right? But the truth of the matter is that we are not using those data points, those behavioral data points that are true to our nature as an economy, especially in Nigeria, to say let's provide access to credit. So I would say that for us, banking is like the fuel. And I will tell you every time and every day, every time I tell people, I said, the future of how we drive this financial inclusion is embedded finance, right? And the only catalyst for embedded finance to even scale is open banking. We need to have data. We need to have alternative data, behavioral data that is infused into even our credit scoring models that we have today or the credit bureaus data that we have. So it's not a one data type, it's multi-data types that we can use and say, based on patterns that we're seeing from these consumers, we can now provide access to innovative products that fintechs definitely are building, like Credit Direct and the like, you understand? But the truth is, open banking is the world for embedded finance. That's just to summarize it. Thank you.
Thank you so much, Faith. You did quite justice to that and opened our eyes to real life use cases. The next question goes to Chukwundo. Zone plays a critical role in enabling real-time financial infrastructure. From your perspective, how does infrastructure like yours power the success? How will it power the success of open banking? How does that translate to financial inclusion at scale?
Oh yeah, thank you for that question. So for us at Zone, financial inclusion is not just about access, it's about reliability, um, transaction uptime. Are we able to ensure that transactions are being routed from end to end without any issue? Reconciliation, are we able to reconcile payments and able to offer automatic dispute resolution as at when given? Are we able to settle transactions to the end users um, real time, same day? Because we know that that's a very big issue for no income in their NL and non-interest people because they want to know, can I get my money instantly? Because they need a particular money as working capital to roll over their business over and over again. And with us as though we know that reliability is at the core of financial inclusion. So we assess that and we ensure that that's embedded into our architecture. As we very well know, we are one of the foremost people in the payment infrastructure piece to actually embed blockchain into our protocol and architecture. And because of that, we are able to offer reliable, frictionless, and uptime as at when due. And we are also able to offer instant settlements to each and every participant in our network. As it is today, as participants join our network, they are able to increase the scale as they are joining because of the architecture which we built. And this has helped improve our likelihood with the normal traditional financial institutions that are having advanced with Bank and other players in the industry, among them who normally disadvantaged networks come to us because we know we are able to give them this reliable, frictionless, uptime payment infrastructure that their customers actually require as a brand. Thank you.
Thank you so much. So we go to the second part of the question, which is addressing inclusion-focused barriers. Back to you, Mr. Chika. Many low-income Nigerians have limited digital footprints. How do we make open banking work for them?
Okay, firstly, these kind of people, in the past, they were not using banks to put their money on the bed because whenever they wake up, they see it. So the first thing is, can they force the financial institution? Because the truth is that if they cannot trust, they cannot be able to do. So what we have to do is also enough. No more be transparent. So at PAPE, we are NPR and we provide a clear constant user data for our users. We try as much as possible not to get that data because if a financial institution uses the data of a customer, especially these customers will never there was a time we were having a meeting with Jimmy Brown. He said something. He said that we cannot suffer to go and bring out people who are not using a financial institution to come and use financial institution. Then as a result of irregularities of some financial institution, we demoralize these people to go back to their normal and this is there should be trust. And for this trust to happen, there should be